While the world was celebrating the historic breakout of silver on Monday, a different kind of activity was taking place in the shadows of the financial system, and keep your eye on this. It wasn't trading. It was sabotage. Late last night, under the cover of darkness, exchange officials and the heads of the major bullion banks convened an emergency session because they saw the same thing you saw. The free market was about to bankrupt them. Silver had punched through the $75 barrier, and the math their own models drew a straight line to $100. Two choices sat on the table, clean and brutal: accept the losses and go bankrupt, or change the rules of the game and steal your wealth. They chose the latter. At 3 a.m., a notice was quietly posted to the exchange website. Keep your eye on this. No breaking news banner, no loud press conference, no tweet, no primetime segment, just a silent upload in the dead hours. And yet the effects were instantaneous. They announced a margin requirement hike of unprecedented scale. This wasn't some boring regulatory adjustment. This was weaponized and engineered shock designed to force retail investors to dump winning positions. They couldn't beat you on the field, so they bribed the referee to change the score mid-match. To understand how deep this betrayal runs, you have to understand margin, because that's the lever they use to pry your fingers off your trade. When you trade futures contracts on the COMEX, keep your eye on the spelling, because in this story it's the COMEX, the exchange itself. You're using leverage. You put down a deposit, say $10,000, to control a much larger amount of silver. That system hums along just fine until the banks start losing. Then keep your eye on this. Suddenly the rules become elastic. Last night's rule change effectively doubled the cash required to hold a position. Imagine buying a house, signing the contract, and then the next day the bank calls and says, "We changed our minds. Bring another $50,000 in cash by noon today, or we take your house and sell it." That is exactly what is happening to thousands of traders right now. They're getting margin calls not because the price dropped, no, because the rules changed. And why force that? Keep your eye on this connection. The exchange is manufacturing a liquidation event. Artificial selling pressure, because the alternative is watching a giant choke on its own exposure. The exchange is forcing liquidation to save JP Morgan from insolvency. But even that wasn't enough to stop the buying frenzy. Reports start coming in from multiple brokerage platforms. Buy buttons disabled, buy buttons restricted. Keep your eye on that phrase because you've heard it before. It's the GameStop playbook again, except now it's silver. Traders trying to buy new silver contracts get error messages. Risk management limit reached. Trading restricted to liquidation only. Read that slowly. Keep your eye on this because liquidation only means you're allowed to sell your silver to the banks, but you're not allowed to buy more from them. When you remove the ability to buy but keep the ability to sell, the price has only one direction it can be shoved: down. This is not a free market. This is a controlled demolition of price. They are artificially restricting demand so they can cover naked short positions at a discount. Market manipulation in its purest, most illegal form. And while they restrict your ability to buy, keep your eye on what they unleash on their side. Algorithms designed to paint a false picture of reality. This morning, massive sell walls appear on the order book blocks of 5 million ounces, suddenly offered at $76, designed to terrify the market into backing away. But here's the catch. And keep your eye on this because it's the trick inside the trick. Those orders were fake. It's called spoofing. Banks drop a massive sell order to scare the price down, and then milliseconds before the order can actually execute, they cancel it. They never intended to sell. They only intended to manufacture the illusion of overwhelming supply. They are gaslighting the chart. They're trying to convince you everyone is selling when, in reality, everyone wants to buy. It's a psychological operation. Shake the weak hands out, break the crowd, harvest the panic. Now keep your eye on the role of the COMEX, the exchange itself, because this is where the story stops being a trade and starts being an indictment. An exchange is supposed to be a neutral referee. It's supposed to keep the game fair. But the COMEX is owned by the very banks it claims to regulate. The board members are former executives of JP Morgan and Goldman Sachs. So when the exchange declares a rule change, understand the direction of loyalty. They're not protecting the market, they're protecting their friends. By raising margins and restricting positions, the exchange has violated its fiduciary duty to the public. And in doing so, it has proven that the paper market is not a place for honest price discovery. It's a casino where the house kicks you out if you start winning too much. Keep your eye on this moment. The legitimacy of the COMEX died this morning. They sacrificed reputation to save the solvency of the cartel. History doesn't repeat, but it rhymes. Keep your eye on the rhyme scheme, because it's loud. In 1980, the Hunt brothers cornered the silver market and drove the price to $50. Banks stared at collapse. So the exchange changed the rules. They declared Silver Rule 7. Keep your eye on that name, restricting purchases, shifting the game to sell, not buy. The result? Silver crashed from $50 to $10 in a matter of weeks. Same playbook. They think it will work again. But here's the critical difference. Keep your eye on the fundamental shift. In 1980, the demand was purely speculative. Today, demand is industrial. You cannot tell Apple or Tesla liquidation only. They don't buy silver because it's a chart. They buy it because it's a component. They need physical metal to build products. Rule changes may scare speculators, but they cannot stop industrial consumption. The banks are fighting a war against physics, and physics always wins. And the most damning evidence of cheating, keep your eye on the spread, is the widening gulf between the paper price and the physical price. While banks manipulate a digital number on a screen, the real world tells a different story. Try to buy a physical 100 bars today, and dealers are charging premiums of 40% or 50% over spot. Why? Because the spot price is fake. The paper price is a lie, agreed upon by thieves. The real price is what you must pay to put metal in your hand. That disconnect proves the COMEX has become irrelevant. Banks can smash the paper price to zero if they want, but they cannot make silver appear in your vault. The market has bifurcated. There's the banker's price and the people's price. Now keep your eye on the next escalation, because it's already written into the fine print. Buried deep in the exchange user agreement is a clause called force majeure. This allows the exchange to void contracts in an emergency. If silver keeps rising despite the cheating, they will likely declare force majeure and say, "We cannot deliver the silver because there is none left." And then keep your eye on the theft mechanism. They'll hand you a cash settlement based on yesterday's rigged price. Legal theft. It converts your property right into a paper claim. They are preparing the legal framework to default on obligations. They know the vaults are empty, and they're writing rules to absolve themselves of liability when the run on the bank begins. So where's the outrage? Where are the investigations? Keep your eye on the silence. Turn on financial news and you hear nothing. CNBC, Bloomberg, The Wall Street Journal, silence on the biggest story in finance. No focus on margin hikes, no focus on shortages. Instead, hit pieces calling silver a meme stock, a dangerous bubble. A coordinated media blackout, bought with advertising dollars because banks are among the biggest advertisers on those networks. They control the narrative to keep the public in the dark. They want you to think the drop is natural, not engineered. They're suppressing the truth as hard as they're suppressing the price. Why go to such extremes? Why risk prison and revolution? Keep your eye on the motive. JP Morgan is trapped. They hold the largest short position in the history of the commodities market. If silver hits $100, the losses on their books exceed Tier 1 capital requirements. In simple terms, they go bust. The entire bank could fail. That's why regulators allow the cheating. The Federal Reserve knows that if JP Morgan falls, the entire U.S. banking system collapses. So JP Morgan becomes too big to fail, and the system hands them a license to rig the market to survive. We are not fighting a bank. We are fighting the combined power of the state and the financial elite. Keep your eye on that alliance, because it explains the coordination, but there is one player that doesn't follow American rules: China. Keep your eye on the chessboard. The Shanghai Gold Exchange, SGE, operates outside the jurisdiction of the COMEX. China sees this cheating and reads it as weakness. When the West suppresses the price, China accelerates buying. They use artificially low prices to drain the West of remaining strategic reserves. The Chinese government is encouraging citizens to buy gold and silver, hoard metal, while the West plays with paper. And by cheating, American banks are inadvertently handing the keys to the future global economy to the East. They are selling their birthright for a quick profit. The rule changes also enrage industrial giants. Keep your eye on who really needs stable hedging. Samsung, Tesla, Sony, companies like that rely on futures markets to hedge costs. When the exchange rigs the market, it destroys their ability to plan. And now, rumors. Major industrial buyers are leaving the COMEX and setting up direct supply lines with miners. If that happens, it's the death knell. Because if industrial users leave, the COMEX becomes nothing more than a gambling parlor for paper speculators. New York becomes a room where bankers trade phantom contracts with each other while the physical market walks away. And here's the miscalculation. Keep your eye on the psychology. The banks thought crashing the price and changing rules would scare retail investors away. They thought you'd panic and sell. Instead, they made you angry. Forums and social channels erupt with rage. Investors are not selling. They're doubling down. They're pulling money out of the system and buying physical metal to punish the banks. This is no longer just a trade. It's a movement, a financial revolution. Every time they cheat, they prove the thesis correct. They radicalize a generation that will never trust a fiat currency again. The banks want you to believe they're all-powerful. They want you to believe they control the price. But keep your eye on what their behavior actually signals. Frantic rule changes, margin hikes, spoofing. These aren't the moves of confidence. These are the moves of a desperate, cornered animal. A strong man doesn't need to cheat to win. The fact they cheat so openly is the ultimate sign of weakness. It means they've lost control of market fundamentals. They're trying to hold back the tide with a broom. They can delay the inevitable, but they cannot stop it. The dam is cracking, and they're running out of fingers to plug the holes. What we're witnessing is the destruction of the very concept of a free market. Keep your eye on the precedent. If rules can be changed whenever billionaires lose money, then there is no market, only a rigged game. That creates moral hazard. It tells banks they can take massive, reckless risks, and, if they lose, the rules will be changed to save them. But that destroys faith in the system, and faith is the only thing backing the UTSS. Dollar. By rigging the silver market, they undermine credibility in the entire American economy. They're burning down the village to save the castle. And despite the paper games, keep your eye on the physical reality. The supply crunch worsens by the hour. Mines are depleting. Grades are falling. No new major mines have been discovered in a decade. We're consuming silver faster than we can produce it. Above-ground stockpiles are gone. We're eating into strategic reserves. Banks can print paper contracts until they run out of ink, but they cannot print geology. The fundamental deficit is real. Eventually, manufacturing demand will overwhelm the manipulation. When a factory shuts down because it can't get silver, price goes vertical regardless of what the comics rules say. Much of the short selling is happening in the shadow banking system, the OTC market. Keep your eye on what you can't see, because that's where leverage hides. Those trades aren't reported to the public. That's where the real exposure gets buried. The belief here is blunt. The true short position is 5 to 10 times larger than official numbers. Hidden debt, ticking time bomb. As interest rates rise and the silver price climbs, the carrying cost of those dark positions becomes unbearable. We're approaching a Minsky moment for the bullion banks, a sudden, violent collapse in asset values triggered by excessive hidden leverage. And yet, keep your eye on the quiet transfer of power. Despite cheating, the transfer of wealth is still happening. Every ounce of physical silver you buy today is an ounce the banks cannot use to cover shorts. You remove collateral from the system. They're trying to shake you out because they need your silver. Do not give it to them. Volatility is the price of admission. Cheating is the sign of victory. We're in the final rounds of a heavyweight fight. The opponent is dirty, hitting below the belt, but he's exhausted. He's wobbling. One more push, one more surge of buying, and he goes down. So how does this end? Keep your eye on the endgame. It ends with failure of the exchange. It ends with physical silver decoupling completely from the paper price. A black market price emerges double or triple the official quote. Eventually, the official price must chase the real price, and the gap closes violently. Banks get bailed out by the Fed. The currency gets debased to pay for it, and holders of physical metal are the only ones left standing with purchasing power. The cheating is not a sign the squeeze is over. Keep your eye on the timing. It's a sign the squeeze is entering its terminal phase. They change rules because they're losing. They halt trading because they're terrified. They want you to sell. They want you to give up. But you know the truth. You've seen the empty vaults. You've seen the math. The system is broken, and silver is the truth. Do not let them steal your future with a rule change. Hold the line. Demand delivery. Empty the vaults. The era of market manipulation is ending, and the era of the people is beginning.